Hi, this is another in our Searching for Profit series where we're looking at QuickBooks tools that can help small business owners analyze the information that they have about their business to find ways to make it more profitable. So whatever kind of business you have, perhaps a plumber, they might have repair work and they might also have work where they're installing new plumbing into a house. You might have builders who do remodel work as well as new construction, or a contractor that does commercial work as well as residential work, someone that has multiple locations, maybe multiple restaurants. How do you break the data down in such a way that you find what parts of your business are working and what parts are not? QuickBooks has a feature called Class. I go to Edit, Preferences, Accounting, and right here is the little checkbox that turns on the Class feature in QuickBooks. I put that check mark in there, and what happens is a column is added to most of my forms. So this is a familiar check form here. Down here on the stub portion of the check where you're putting in the expense account and the amount and so forth, now there's an additional column here called Class. Now it wasn't there before we had the check mark in the Class checkbox. And so I can add a designation here. So again, location 1, location 2, location 3, new construction versus remodel, repair work versus new installation, those kinds of things. And I can break down my business in that way. Let's take a look at the Rockcastle construction sample file and see, let's take a look at what the numbers are, how it looks, and let's see what we could find that might improve performance for the sample company. So when I have the Class feature turned on, there is an additional report on the menu. It's called Profit and Loss by Class. So looking at this, here are my familiar accounts from the chart of accounts, just the same as if I created a profit and loss standard. But there are additional columns. There's a column for each class that has been created on the, as part of that class setup. In the sample file here, we have new construction, we have remodel. We also have overhead. So the way the sample file has been set up, it was assumed that almost all transactions could be designated as either new construction or remodel. So this would include all of the income. This would include all the direct expenses of creating that income. Then as we move down into the regular expenses, so vehicles, insurance, office, bookkeeper, those kinds of things might be a little bit more difficult to assign to a particular class. So in this instance, the class used was overhead. So overhead has no income. It only has expense. It has no, actually should have no cost of goods sold. I see there are a couple of things here that would have to be edited to move into either new construction or remodel. Now, if your business can identify all of your expenses by class, then that's really what you want to do. It would be nice to have a profit and loss report that would show all income, all expenses for the activity new construction, and we could see right here whether it was making a profit or not. We can't really see that with this particular setup. We can only go as far as the gross profit. That still tells me quite a bit. I mean, I can look at the gross profit for new construction and I can look at the gross profit for remodel. Let me show you something here that will help with that. If I go to Customize Report, I can choose this option, percent of income. That adds a column here for percent of income for each of these classes. Now I can see that in my new construction class or activity, 89% are the direct costs, leaving only 11% to cover other business expenses. That's not good. That almost 90%, that's a really high number. I can look over at remodel, and I can see that almost 28% of my direct costs, leaving about 72% to cover other business expenses. So that's a really good number, probably more than realistic. We probably aren't going to see that very often in real life. It would still be nice if I could go all the way to the bottom line. There's a way that I can do that. If I want to make an adjusting entry, if you will, at the end of each period, I would do that each month. So I look at the sales for the period, and in this case, if I do the math, I find out that 41% of my sales are in new construction, 59% are in remodel. Well, it's pretty fair then to take those expenses that are in the overhead class, those things that whoever was entering the data, they just couldn't figure out a way to divide it up between new construction and remodel. I can divide it up now. I can say new construction, since it's got 41% of the sales, should shoulder 41% of the costs of operating the business, right? So that's what I'm going to do. I am going to create a journal entry. And let's make that for 12. It was at the end of the year for the sample company. I have a special account that I've created for that. It's an other expense type of account allocated to class department. I'm going to make my first line the negative line. I know the numbers are not completely accurate in my overhead class in the sample file. I would have to go back and do a bunch of editing in order to make that work out perfectly. But, you know, let's just take what we've got and we can see the concept, and then you can work this in your own business. So let's go with this number right here, $199,351. So like I say, I've got that in the credit column because that's going to be my negative. It's going to, theoretically, it would reduce that overhead class to 0. Like I said, it's not going to work perfectly in the sample file, should work perfectly in yours. So the class on that line is overhead. I'm going to use the same account, and I'm going to allocate 41% of that to new construction. Well, 41% of that works out to about $81,640. The class new construction. Same account again. There's my 59%, and I want that posted to remodel. Now, if I save this entry, now I can look down at my bottom line, and with each business activity, each department, each class, whatever terminology you want to use, actually getting their fair share of the operating expense of the business. Look at new construction. It's losing money. It lost over $61,000. And remodel, it made $73,000. So you can see where the profits are. The profits are in remodel, not in new construction. So if I had a ton of business, all I could handle, I'd stop doing new construction. I'd just say, you know, it loses money. I'm better off not doing any. I make more money if I don't do any. And I would put all of my resources into remodel. Now, if I didn't have that luxury, if I needed all the business I could get, I needed both new construction and remodel, then I'm going to start, new construction is where I need my attention. That's where my attention needs to go, right? So I'm going to start looking at probably the bids that we are creating are too low. If the numbers were smaller, it's possible that it could be something else like job materials being stolen off of the site, or job labor being overbilled by subcontractors, those kinds of things. In this case, the numbers are so large, I think we would have to see that. You know, I think we'd have to see the job materials disappearing off the site in order to make up the many thousands of dollars that we have here. My first guess is, if I'm the business owner of Rockcastle Construction, my guess is our bids are not covering the expenses they need to cover. And they need to cover not only expenses, but they need to cover profit as well. So that's where I'm going to put my efforts. So I hope that gives you some ideas of how you might use this in your business. It doesn't have to be a contractor. You know, you can be any type of business, but if you have multiple locations or multiple business activities that you can break out the way we've done here with Rockcastle Construction, you can use this method. Again, we're trying to kind of slice and dice the information that we have in QuickBooks in order to take what is a large, well, not necessarily a large business, small business, but still large in the fact that it may have thousands of transactions. We're trying to slice that into smaller pieces so that we can find those individual pieces that are not performing as well as they should. And then we can put our efforts there in order to improve those. Keep an eye out. We're going to have a couple more of these videos in this series, Searching for Profits. I hope this was helpful. If you have any questions, leave those in the comments below. Thanks.